Okay, so Liam Robertson, from Managing Director of the Alphabet Fund. So we'll explore the journey of the last year and a half or so. The CoinAgenda in March of 2017. You ended up really sort of announcing the Alphabet Fund at the first CoinAgenda Caribbean in Puerto Rico, and it was actually an event about this size, but boy, the companies that came out of that and the people who were attending, I mean, I think we have a great crowd here as well. Some CoinAgendas are 600 people, mainly in the ones in the mainland or the second Puerto Rico show. Some of the more interesting ones are the smaller shows of about 100, like this one. And there we had Bancor launch, we had Eternity launch, we had Quantum launch. FBG came into the U.S. and you ended up like basically rolling out what you were planning to do with Alphabet. Flash forward a year and a half, $300 million under management. Plus, can we count the other $100 million from that other area, or should we not talk about that?
Yeah, we can do.
Okay, so $400 million now, and 1 full year under the belt, you know, Alphabet means basically, in disclosure, I'm an investor and advisor at Alphabet, and very happy about both. Basically, your whole thing is most hedge funds go and have an alpha of some kind that they're ranking their performance to instead of the 80-20 that you get more typically in a venture fund that's creating something from nothing. But if you're basically going and investing in crypto, last year you could have just simply sat on Bitcoin, done nothing, and taken 20% of a 300% gain. So at Alphabet, the alpha bit is that you have to beat the price of Bitcoin. And so 300% return the first year. You started end of June in 2017. You now have a mark-to-market for 1 year. We'll be kind of publishing these numbers, but we can talk about them informally here now. So 300% up for Bitcoin, and you're at around 800%?
867, I think.
And that's after fees.
Yeah, after fees. Right.
So pretty incredible, beating the price of Bitcoin by more than double. And I think last year when they listed all the top hedge funds, because they usually do that in March for the previous calendar year, you're on a different fiscal year, but you can certainly calculate mark-to-market at the end of this December for the first full year. I think the top performing hedge fund in the country was about 30%, so kick the living crap out of it. So what was the vision, and how have you sort of been able to ride these rocky markets other than selling a lot of Bitcoin in December?
Yeah, so that the vision of Alphabet is basically just generate more Bitcoin for our clients. So it's basically, we want our clients to have a solution where if you have 10 Bitcoins, or we don't accept that investment, but I'd say 200 Bitcoins, you stick it with us, and at the end of the year, you'll have 150 Bitcoins. And we do with also, it's not just outperform Bitcoin, we do it with less volatility as well. So we measure it relative to a Sortino ratio, which is a risk-adjusted performance metric, which is return divided by downside volatility. So we look at downside volatility of the market, and we have to outperform Bitcoin in relative downside deviation, which is basically a metric which looks at outperforming in the negative months, right? That's the volatility in up markets is good volatility, right? So we how can we outperform with the...
So you got to have a lot of quants on staff then to be able to make sure that you're not only outperforming Bitcoin, but you're doing it with a lower level of risk than if you just had a monkey throw things at a chart and you outperformed.
Yeah, so return per unit of risk. So we generate more return per unit of risk, and our unit of risk is downside deviation, not volatility. So downside risk relative to upside and downside risk, which is volatility in itself. Yeah.
And so you're regulated out of Dubai. The fund is registered in Caymans, and you live in the UK and Lithuania. And are on a plane everywhere, right?
I've never been to
Sorry,
Lithuania.
Liechtenstein. Another one of those small L jurisdictions, right?
Yeah,
sorry,
I'm sure Lithuania is really nice.
Yeah, Liechtenstein, sorry.
Yeah, Liechtenstein, yeah.
So some of your thoughts on different jurisdictions, since you've obviously been a master of sort of studying them, and what they kind of mean for Bitcoin and crypto assets in the coming years?
Well, I mean, Dubai and the MENA region, the UAE is open for crypto, so to speak now. They are positioning themselves to move out of oil and into crypto or blockchain, so to speak. So they are open for business, and that we like that. We like being domiciled there because of the tax. You know, it's good to not pay tax.
Right.
And obviously Malta, we're looking at Malta for a couple of ICOs that we're involved in instead of setting this up as a jurisdiction. And Liechtenstein as well, same as Eternity. They're open for business in the crypto space. And what Emin said, there's 5 people in the government, right? And we've met them all, and you can get business done. And they've just coming out with a legal framework on how to treat cryptocurrency, which is I think is out in the next couple of months, or in 6 weeks. So you'll know exactly where you stand. So you have a legal framework, so you know exactly where you stand with relative to law. So that for me is a pretty important thing when doing business, rather than having the uncertainty of things potentially changing. You know.
Yeah, that's one thing that I hear over and over again from sort of like large family offices, large sovereign wealth funds. Is, you know, I mean, I talked to someone from one of the larger sovereign wealth funds in Asia, and you know. You always hear Asia's investing money, not the sovereign wealth funds yet. And not only is it too small for them, but they literally said, until this is regulated, we wouldn't touch crypto with a 10-foot pole.
Yeah.
And so obviously, you know, as Kellum had said earlier from VideoCoin, 2017 was the year of the ICO, and 2018 has been the year of regulation. But regulation in jurisdictions that investors and funds can work with is a very good thing.
Absolutely right. I completely agree.
And so, so obviously you're regulated in Dubai. You're also working with, jurisdictions like Malta and Liechtenstein. Where do you sort of see regulatory arbitrage working to get the comfort levels in, and when will that kind of bubble up to people in, Switzerland and New York, that they get that it's now a regulated industry and they can feel like it's not the Wild West and people are going to steal their coins?
All this talk about institutional money coming to the sector, and it's still not happened. There is no institutional money. I was at a conference in the UK not so long ago, and it was all these hedge fund managers, and they're still asking how to get into this space. They don't have a clue, and they should they don't even know what blockchain is. They're so arrogant, I think the key to the regulatory framework and then being comfortable coming is the CBOE ETF listing. That would be huge. And BlackRock Asset Management, which is the biggest money manager in the world, I think it's 7.23 trillion. They run a lot of mutual funds, a lot of pension money. They're looking at setting an ETF up, right? So it's a huge institutional player like that in the US comes and puts together a viable product, which allows retail investors in places like the US get involved via their pension scheme or what have you. Then you'll see the turn. When you see.
So obviously, with people like the 90-year-old Vanguard founder saying, "I'll never do anything in Bitcoin because it's a scam." But if BlackRock, which is bigger than Vanguard, comes in, or Fidelity, or anybody else that's a sort of multi-trillion-dollar name comes in and says. And again, one of the slides said that 1/3 of millennials plan on purchasing Bitcoin. So the 90-year-olds are dying every year in pretty large numbers, and the millennials are not.
Yeah, I mean, if you think of it like BlackRock, if they have $7.3 trillion of money under management, and they have a team of a load of quants which are constantly messing around with efficient frontiers, asset classes in the efficient frontier, which has to be then extrapolated into their portfolios. As soon as Bitcoin goes into that means automatically a 3% allocation of the money goes into Bitcoin, whatever Harry Markowitz's efficient frontier of the most efficient way of allocating assets. If Bitcoin's part of that 7.3 trillion, like whatever the number is, 3%, 2% goes straight to Bitcoin. That's when the market's going to get kicked off again, and that's what we're going to see, I think, in the second half.
And that's patient money too. So it's not day traders. It's not.
No.
The biggest sort of false start, I think, for Bitcoin was when all of a sudden it's, hey, make Bitcoin work, you have to get your local merchant to accept coffee and with Bitcoin, a cup of coffee with Bitcoin. And that was horrible for Bitcoin because they had all these guys like, BitPay and GoCoin and Coinbase just, hire a bunch of raise money, hire salespeople, go to the merchants and say, hey, these crazy people want to pay for Bitcoin. You don't have to worry; it's cheaper than credit cards. You'll get cash. Yeah. So it's massive sells on the market, as opposed to when it's ETF purchase, when it's a mutual fund. That's patient capital.
Absolutely right. Yeah, and if you see the sell-off since Christmas. The volume, the Bitcoin volume is low, very low. Right. Low. So like when you're seeing price appreciation on low volume, it doesn't really concern me too much. Mm-hmm. It means like there's still no depth in the market as well. It's a very thinly traded asset.
So what was the high point of the buys, and what was sort of the high point of the sells? In terms of like billions of dollars, do you remember off the top of your hand? I mean, you certainly see the biggest price charts in November and December.
Well, we exited at $16,000, most of it, yeah. Right. And then we got a lot of our alpha ensuing from buying specific really good projects, which have done very well for us. But like, there's been no huge institutional asset sell-off because the institutions still don't have any Bitcoin. Like what I've been seeing in the OTC market is a lot of family offices are now buying Bitcoin, and a lot of miners continue to sell Bitcoin. So you're seeing a redistribution of the Bitcoin where it's placed basically, and that for me is a bullish signal because it's repositioning itself, realigning itself for a different player.
So it's going from people that if the family offices weren't buying them, couple of $100 million at a time.
Yeah. 100,000 Bitcoin buys and sells quite well.
Yeah. So you're going from it being held by miners who are notoriously transactionally oriented to family offices that are not. So even though it's not affecting the price, because if they bought this on market, we'd be at 20,000 Bitcoin
Absolutely
again.
Right. Yeah. Absolutely right. And we still need to educate the institutions how to trade Bitcoin because if they hit the price in any volume in any exchange, then they'll significantly impact it.
So I'm going to switch gears a little bit, even though I guess probably 70 or 80% of Alphabet is sort of arbitrage between different jurisdiction exchanges and altcoins, and maybe buying some of these great ICOs from last year at below the ICO price or even below some of the pre-sale prices. You're still one of the I keep hearing nobody in Europe, not a single euro is going into ICOs yet. Your European-based fund, I mean, in terms of where you physically are and a lot of the other partners, you have an office in London. You're still buying ICOs. Are you the crazy one, or are they? And what makes an ICO of interest to you in this market?
I mean, so there's $7 billion spent last year on ICOs.
Yeah,
it's already been $6 billion this year, and the market's been sold off, right? The key for us in buying ICOs is pretty simple. Get the best price, right? Because of the way the discount structure works, buy into these things. And just picking the right team. The team's more important than the project. Mm-hmm. The team to execute the project is pretty important.
Just like with a startup, a great team will figure it out, and a lousy team with a great idea will screw it up.
Yeah, I mean, all ICOs are is just businesses, right? We're just private equity investors, basically. Yeah. We don't give a fuck about the token or anything like that. We buy in the company, we're buying the idea that it can work, and look for the business to be successful. Whether or not it's a blockchain company or another company, it's kind of irrelevant. I mean, as long as the token has some functionality or utility, and the business is a reasonable idea, and the team is good, then we'll look at it and we'll entertain it.
So let's look at tokenomics, because that's obviously the only reason, other than you and your team's ability to pick great projects, that you outperform the best stock pickers by a factor of 10x or more. Because when you're judging against the S&P, in a great year, the S&P might go up 20%. Yeah. 15% is more normal, and I think the historical average is more like 5% or 6%. And some years, of course, it goes down as well, and nobody says stock market is dead, or NASDAQ is dead and will never come back. Why were we thinking of ever investing in stocks, which people certainly said in 2008, swearing under the breath, but nobody really believed that the stock market would completely die. So how long can we expect that? I mean, I think we're already past the idea that people can just go out willy-nilly with random ideas and say we're raising $200 million. But how long will sort of the comparison be that even over a 5-year period, the expectation is you're going to be able to continue high double to low triple, percentage gains in a maturing market? Is it still so small that those gains are going to be here? I mean, when 2021 rolls around, will we have 100,000 Bitcoins and a lot of other ICOs that outperform it, or are we going to be sitting around and it's still around 10,000 5 years from now?
I mean, the crypto space the whole space is the same size as ExxonMobil, one company on the S&P.
Right.
It's tiny. We're absolutely tiny, and we always think we're like bigger than we are, and we're cooler than we are, and more important than we are. We're not. We're nothing. It's like zero. Nothing of any consequence whatsoever. But what we're trying to achieve might have some kind of impact. I mean, the market. Bitcoin is, in our opinion, it's our house belief that the Bitcoin price will go to $100,000 by 2020, before the next halvening. I think ICOs will change, the whole structure of ICOs will change. I think people are going to demand more out of tokens in terms of what accountability, because people raise so much money and it's a token and they have no influence over the business. I mean, Augur, for instance, they were one of the first ICOs, weren't they? Very early ICO. And they just turned into a hedge fund for a few years, and they released a product, and they just literally released the first product, the first prediction market. And that's not acceptable. That kind of bullshit's not acceptable, and that's what crypto.
Yeah, they were 2015.
Yeah, so they just got around the idea of like starting the predict what it's meant to do. 3 years later, yeah.
So the whole idea of the ICO was to get away from equity investors and boards and things like that. But I think now you're seeing a little bit of in order to get the venture capitalists to invest in tokens, they're typically going to want to have both equity and tokens. And some of the business models, if you're not a pure infrastructure token like an Ethereum or a Stellar, you have a for-profit business that's probably not going to do as well as the token, but the governance of that for-profit business is going to be crucial to the performance of the token, because if the for-profit business that you have no control over says all of a sudden someday, yeah, you know what, we're going to go and accept just MasterCard payments and not require the token anymore, you just kill the token.
Yeah,
so is that sort of a fundamental way of thinking with many of even the pure crypto funds looking at getting equity stakes in tokens these days?
Yeah, well, we kind of changed our investment philosophy to, we want equity and we want you to give you free tokens, please. So we're buying the equity and you give us free tokens. That's basically how we go about our business now. We like coins. What I mean by coins is we like money. We like Bitcoin. We like Monero. Yeah. We like things which are meant to be a coin. And with tokens, there has to be some very distinct utility and a platform or something which the token's going to have to be functional in, like Wax. We like that, yeah? And all the other stuff is just bullshit, making the token to get money in as quick as possible. That stuff we just stay away from, So, yeah, that's what we want. If we're going to invest in a tokenized company, we want the equity as well, because ultimately the token could be zero at some point,
So you're looking at large global markets, you're looking at great teams. Any other one or two things that sort of light you up instead of shut someone down? Yeah,
very low valuation. No, we want a low valuation in the last 50. Well, we get about 300 or 400 cold call kind of emails and stuff every week. But we like something which hasn't got the arrogance to say we are. There's a couple of projects, not going to name the 800 million valuation on a startup. I mean, you're taking a piss. Who do you think you are?
Right.
What have you worked? It's just ridiculous. Get out of my face. That kind of stuff is ridiculous, yeah. So we like things sub 100 million. 100 million is pushing it. We like 20 to 30 million. You're a startup, right? Yeah. We'll get the money to prove the concept, prove your thing works, and then hold your own tokens, and your tokens will create the value, and you spend your own tokens on developing the business. That's what we like to see. So you've got to be legitimate, legitimize your business, prove that it works, hold your own tokens, and use that to expand your business, not raise a load of money, stick it in a bank, or actually just turn it into a hedge fund, forget it, let's not even do anything anymore, like what Ogor did. They just went and started investing all the money they raised, and they made really loads of good money on it. But the people who bought the tokens in the ICO didn't have any right over that money they've done. They've just been fanning around for the last couple of years. That kind of stuff we don't like. We like best practice, and we like the way to do business in an ethical kind of manner.
Now, it's interesting because, I've long sort of been railing against confusion, particularly in the U.S., over security token versus utility token. But Silicon Valley's newest thing is closer to what you're talking about when, for example, Chia Network, one of the hot projects out there, decided to go. They could have probably raised $150 million if they just did a straight-out utility token in a hot market. Instead, they said, you know what? We're so uncertain about the law, and we think that it's going to get clarified in the next year. We're going to just take $4 million, because that's really all we need, because it's like, it's Bram Cohen who built BitTorrent and a couple of programmers. They don't need that much to build the program. Yeah. And then when we actually build a program, we can show it works. Then all of a sudden, we can go and do a gigantic one based on something that actually works, because they're trying to actually be the new Bitcoin. Yeah. And if they're even the new Litecoin, that's a huge valuation. So what they did was they took $4 million. Okay. You can just wave. We're trying to stay on time. So you can go in and so what they did was they went in and just took the $4 million from two of the top VCs in the world, Andreessen Horowitz and Union Square, knowing that was going to also raise a lot of eyebrows on Sand Hill Road. And then they said, hey, we're going to build this thing, and then we're going to do an ICO in a year, and we hope things will be clearer then, and maybe they'll be able to raise $500 million when they have it there. But the early investors now basically have got control of the situation, and they're not going to be able to go off and say, oh, we just changed our business model and you're screwed as the investor. Yeah, absolutely right. I mean, I got a lot of respect for Bram, and also I wanted some of that Chia, but couldn't get anything. But that's the right way to do it. I mean, I suppose he doesn't smack of desperation because he's a made man himself, I suppose, anyway. It's like all these new punks want to raise a load of money, and with this ridiculous ICO water. Right, so a bit of sand, which you've been seeing stupid shit like that. But that's the kind of way the model and the correct way to basically moving back to the kind of VC structure a little bit, Mm-hmm. And I think that's the kind of right way to go about things. Yeah. Now, since the majority of tokens are still in the old way, how do you deal with that, or is it a case by case basis?
It's completely case by case, and it's always. Based on the team and evaluation. It's like two important things.
Great. So I'm going to turn it over to the crowd, which probably has even better questions than I do. Stuart.
Yep. So if we have a question from the crowd, just raise your hand. Nope.
Good.
All right.
We're good. We're back on time.
Thank you, guys.
Thank you.
Yeah, I appreciate it.